Nilesh Shah is joining us now, Managing Director at Kotak Mahindra Asset Management Company. Nilesh, good morning. Great to have you with us here. It's been a while. We also missed you at that AMC event. I think you were traveling. So good to see you again here. Nilesh, your thoughts on earnings and what these fourth quarter full year FY23 earnings have done to FY24 estimates so far? Because that is something which we've spoken about before as well. And you've been pointing to concern that the breadth of earnings surprises perhaps maybe reducing a little bit and underlying quality has been suffering as well. Has that turned after third quarter with earnings that you've seen so far? Go on.
Thank you, Prashant, for having me over here. We have clearly seen that there are sectors like banking where profitability has been impressive. And then there are sectors like consumption where profitability has been below expectations. We believe going forward also it will be more sector-specific trends and company-specific trends. Sectors like IT, pharma, consumption will get impacted by global as well as local factors. Whereas sectors like banking, because of the higher base, may see subduedness from a growth point of view, whereas the absolute numbers will still be impressive. Overall, 2023 put together has ensured that there is a bottom to the Indian equity market from a valuation point of view. This is the first time in a financial year where aggregate profit of India Inc. has crossed 10 lakh crore. That's a significant achievement, and this provides bottom to the Indian markets from a valuation point of view.
Nilesh, morning. So the question is, why are the DIIs selling? The DIIs were big buyers in the Indian market through the month of January, February, March. In April, the buying trickled down, but still on an aggregate basis, it was a net inflow. Then come month of May, as the FIs have started buying in the Indian market, the DIIs have turned on their selling tap. What's the reason for that? If the bottom is capped for our markets, it's protected, why the DII selling, and what are the themes of sectors they're uncomfortable holding at current levels?
So, Rima, there are three components to DII selling. One is in kind of non-active, non-directional fund like arbitrage fund. If people redeem from arbitrage fund, I have to go and sell in cash market. So that component has no view. It is just execution of what my investors want. My feeling is that in the month of May, a reasonable part of selling is from arbitrage fund. The second selling is from a category called balance advantage fund. As you know, Rima, these are the funds which swing based on the valuation of the market. The size of that fund is roughly about 2 lakh crore plus. We have a delta of somewhere around 30 to 40% in those funds, where we increase our equity allocation towards 100% as markets become cheaper and go towards 0% as market becomes expensive. On a 2 lakh crore AUM, 40% delta is 80,000 crore move. This is kind of shock absorber in your car. When there is a pothole, it takes away the absorption. The third is the active and passive funds, where we take a view based on investors' flow or based on our own directional view. In this category of funds, flows have been positive, and we have been selective buyers in various sectors. So when you look at the data, please remember to distinguish arbitrage fund selling, balance advantage fund selling as market becomes fairly priced to expensive, and active passive fund selling, which is more flow driven. I don't think so domestic mutual funds have increased cash balances. We continue to maintain around 5% cash for meeting day-to-day redemption requirements.
No, that's very well explained. Nilesh, so one is what mutual funds are doing. The other is what investors are doing by handing over money to mutual funds. So last month we saw a very sharp dip, right, in the month of April. I think till about the 18th or 17th of May, when I had a few conversations, the sense I got was that May also is turning out to be pretty subdued. Has that picked up? inflows into mutual funds, equity mutual funds?
No, Prashant, what we have seen is that at aggregate level, investors have become tremendously mature. Whenever markets are lower, let's say below 17,500 to lower, we have normally seen SIP plus subscription. And our monthly investment run rate is between 20 to 25,000 crore. Whenever markets are looking little bit on the higher side in the short term, let's say 18,000 and above, we have seen SIP flow minus redemptions. This has resulted into monthly run rate coming to somewhere around 3,000, 5,000 crore. Clearly, this is the aggregate behavior of investors. There are people who continue to do their SIP. There are people who try to time the market. There are people who try to be disciplined asset allocator. But on an aggregate, we have seen tremendously matured behavior by retail investors, where they continue to buy at the cheaper levels. They continue to book profit at the higher levels. This discipline provides lower volatility in Indian market.
So Nilesh, so based on the earnings that we've seen so far, and a bulk of the earnings season is behind us now, the management commentary, the order book, what would be the top 3 themes from an investment point of view? What are the trends that you're spotting based on the management commentary now?
So Rima, clearly manufacturing theme seems to be picking up. China Plus One has opened up opportunities for Indian companies, especially those companies which have their parent overseas and who are able to swing their business out of China to India, are on a multi-decade expansionary plan. This is what was technology sector in 2000 at Y2K, or probably chemical sector was 6-7 years ago when China withdrew from lower-end chemicals market. Manufacturing promoters, manufacturing companies have given a reasonably bullish guidance about China Plus One. The second sector is banking and financial services, which is quote unquote in Cinderella time. Margins are nearly all-time high. NPAs are nearly all-time low. A banker could not have asked for a better time than today. The third sector, which is doing reasonably well, is infrastructure. In this budget, for the first time, I think 10 lakh crore was allocated towards infrastructure development. Ahead of election, government pushes acceleration, and we did see 100 kilometers of road being built in one day. Put together between manufacturing, infrastructure, and banking, we think on a bottom-up basis, you will have market outperformance.
All right, Nilesh, got that. Nilesh, I just want to go back to that point about flows that we were talking about. So have flows picked up into mutual funds? Or, I mean, I get the broader point that you were making that, investors have become extremely mature, and that is very evident by the SIP number, which remains rock solid, whereas the lumpy number tends to move around a little bit. But net, at the net level, have inflows picked up, or they're still a little low in the month of May?
The May inflows so far, what data we have is almost similar to April, but little on the higher side. So the numbers hopefully towards the end of May will be higher than April, but lower than March.
Right. Nilesh, since I have you on the show, I have to ask you, and you are one of the veterans of the industry, what do you make of the recent regulators' proposals with regards to total expense ratio? And I'm sure that you've discussed this internally, you've discussed this with your colleagues at other mutual fund houses, your peers. What is the overall feeling? How will this get done? Because, the deadline for feedback, etc., and I'm assuming you guys have given your feedback to the regulator. If this does go through, is there a significant impact in terms of how business will take place, profitability for AMCs? Or you think by passing some of this downstream to distributors, brokers, etc., this can be managed? Your assessment?
So one, this is public consultation. There are many proposals where we are in agreement with the regulator. This will reduce cost for the intermediation and help improve offering of mutual funds to the investors. There are certain proposals where we are seeking clarification. And as Association of Mutual Fund in India, we will be sending or participating in that public consultation. We have always found SEBI to be data-driven. Whenever we have faced challenge, there is an open door policy. We go with our data, our proposal to SEBI. They give us a patient hearing, and then they take a call, which is for the overall development of industry. In 2018, there was a expense ratio cut. At that point of time, industry AUM was about 20 lakh crore. Today, we are at about 40 lakh crore. The profitability of AMC and distribution has also improved. So as long as the overall pie grows, for which economies of scale, lower cost are critical, I think we are all together in this development.
Okay. All right. Thanks a lot, Nilesh, for joining in and giving us your view on the markets and on select topics as well. Wishing you a good day ahead. But let's